Welcome back, everyone. Today we get to look at data from over 300 companies from a variety of sectors all around the US. Okay, this is brought to us by the ISM Index, which they go and track and survey 300 companies and their supply managers, and we get to really look at the roots of the US economy and the roots for these companies that uh, we build upon, right? And boom, boom. Okay, economists love this. This is a very key economic factor for the next 6 to 12 months. Okay, so we're going to look at this, get into the details, and hopefully be better off afterwards. So to start us off, we're going to look at the ISM Services Index. Okay, the new report came in at 56.7%, and we saw this pretty massive run up in late 2021 after being relatively flat, and we are actually back down, big downtrend to safer levels. I would say less um, volatile levels, which could be bad, could be good. Okay, we have a lot of down still in us, right? If we go back to this baseline here, this break even line, we still have a lot of economic downturn potential. Okay, and if we keep following this downtrend that we're in right now, then we will most likely get to that break even line, and we still have a lot of services ISM to go down. So not really great news, but we are currently at levels that are historically good for the economy. But this downtrend is scary, and it could pose as um, an indicator for the next 6 to 12 months, right? So um, if we really look here, we see that the ISM overall, the PMI, is growing, but at a slower rate, right? Along with business activity and new orders, they are all growing, but at a slower rate. So what does that really mean? Well, if we look at the trend is 28 months. So if we look back 28 months, yes, the services, business activity, and new orders are indeed growing. But recently, and what's more important, is that they're now growing slower, right? Which means that we will see slower growth, a declining growth. So this direction, although it is growing now, could turn into contracting or decreasing, right? That's really important. And so the overall economy, right, and sectors and service sector is growing at a slower rate. And the only reason it's still growing is because they are seen on a 28-month trend. All right. So we look here at these charts. Okay, they are all they are all above the break even. Employment's a little bit below, or employment's closer than most, but they are all above the break even. Okay, which again could pose as a threat. It could pose as more downturn to come. It could pose as we haven't even started the bad yet. And so that's something that we really need to think about is, do we have more business activity decline, more new orders decline ahead of us? Okay. So now we can look at the manufacturing. So that was services, now we're looking at manufacturing. Manufacturing is at that break even line already. Okay. They missed their expected. They are at break even. They are not at overall economy break even, but they are at manufacturing break even. And we've seen this pretty hefty downtrend from early 2021 in manufacturing. Okay, and this again has a large effect on infrastructure and all that. So let's look at some closer numbers. There's our little difference in services. Okay, once again, overall on the 29-month trend, direction is growing at a slower rate. Okay, new orders are contracting at a slower rate. That's on a 2-month trend, and production is actually growing at a faster rate. So looking at manufacturing, right, we could be nearing sort of the bottom for the manufacturing index, which could be good. It could mean we have more uptrend that we could start getting into. Or like we see in COVID, we could go much lower. Um, but once again, we see the direction growing, at a slower rate on the 29-month trend. So if we kind of look at it, manufacturing and services are very different at the moment. Manufacturing is much lower. They've been hit a lot harder. Services still have a lot more down, a lot more pain potential. The big question is, how did stocks react to this information? Okay, so this was the morning of. This was right before we actually saw a rally of about 0.75%. The second the data came out, we saw this drop. This doesn't look good for services. It doesn't look good for manufacturing in the next 6 to 12 months, and it kind of shows. This obviously is a mixture of the ISM data and the Fed report releasing today, so we have to be careful of that. But right now, stocks are looking a little skeptical after having this nice little rally here. So they kind of pulled back after hearing the ISM data and are kind of fearful right before the new FOMC meeting. So keep that in mind, and thank you for watching today's video. Be sure to tune in next time.